For every month that a borrower goes behind, it reduces the value of that note. Okay. So if a new note is originated, like you go out and buy a house right now, just say simple math, $100,000 house, $100,000 mortgage, or maybe 97,000, you put in 3% down. If you miss your first month's payment, oh my gosh, that's a big no-no. Because most of the times, a lot of these originators, mortgage companies, they'll originate in-house and they'll turn around and sell that note off in 30 days to a bigger fund or a lender, bigger bank. You've all probably, if you've ever bought a house, you've probably gotten that letter, hey, your note has been sold, right? But there's usually what's in most of these mortgage agreements or these mortgage companies have what's called a buyback clause. So if Judy buys a house and she puts $3,000 down on her $100,000 house and gets a mortgage for 97,000, but she misses her first month's payment, misses it, like goes more than 30 days behind, that value of that note has dropped. It's no longer really worth 97. It's worth 95% of that 97, maybe 90 cents of the dollar, depending on how it's the interest rate or what her FICO was. Okay. So it loses 5 to 10% every month that she's late. Well, now, in most of these mortgage companies that are out there, these mortgage brokers, if their Judies stop paying in the first 6 months, they've got to buy that note back at full value. So now they've got to buy back that $97,000 mortgage, which is maybe only worth 92 now because of value, right? So this is why banks are very aggressive on the outreach when you're falling behind.